Welcome to the second day of FreightWeekSTL 2024. I'm Mary Lamy, Executive Vice President of Multimodal Enterprises for Bi-State Development. In this afternoon's session, we're going to learn more about the agriculture and barge industry trends for this year and how future outlooks might impact ag freight moving through the St. Louis region. Our featured panelist today is Ken Eriksen, Managing Member and Strategic Advisor with Polaris Analytics and Consulting. Ken, tell us a little bit about yourself and your company.
Well, thank you, Mary. I appreciate being on the program again this year, and it's a real privilege to be speaking to the audience on this Freight Week. It's very exciting. I have an opportunity to be able to form my own company, Polaris Analytics and Consulting, in October 2023. I had spent several years with a number of companies that were either sold or acquired and merged into different organizations, from Sparks companies to Inform Economics to IHS Markit, and then S&P Global. And then I was given the opportunity to look at other things in the world. And so the opportunity came to form Polaris. And with Polaris, I'm having the opportunity to work with clients in the areas of risk management, feasibilities, due diligence among the commodity supply chains, with emphasis around agricultural, energy, renewables, biofuels, but also then looking at how those commodities are moving in the system and around the world. And also been recently brought on with the Waterways Journal, and it will be compiling their annual barge fleet survey that they acquired from IHS Markit, while also writing a weekly column for them, as well as in some other publications. I'm doing some work. So very exciting to work with a number of people in the industry, working with the inland ports on different river systems, as well as some deep draft ports. And we'll be doing some training with some folks down in Brazil as well. So very exciting times, and look forward to working with many others in the industry still as we go forward here.
So what trends are you currently seeing in the movement of agricultural products globally and through the St. Louis region?
Yeah, there's a number of different factors that are taking place and having an impact. And certainly, as we've looked at for the last 2 years with the Mississippi River having low water conditions, and we're coming into the spring and we're well into that. And that's really good because we're getting some water back into the system here. So the low water, I don't know that we're out of the woods yet, especially as I look at the snowpack on the upper Missouri River Basin. It was at very low levels on the snowpack, especially in a water equivalent. And I'm going to be watching very closely as we go into late summer and then into early fall, late fall, and then early winter, of what the water levels will be on the upper Missouri and what's in the reservoirs. But importantly, what that will mean as what kind of water will need to be held back from the Army Corps of Engineers, or how much they can release and make available through St. Louis as we get into that late fall, early winter time period. So something to watch as we go forward. And then, of course, with Panama Canal, they have had a low water themselves. They've had their own drought as an effect from El Nino. They're coming now here in May, which should be their lowest water levels for the year, and start to enter into the rainy season. And there's the potential for a La Nina to form, and that could be very beneficial for the Panama Canal. And already starting to see some water levels improving, or at least hitting the bottom and starting to move higher, as well as the soil moisture. If the soil moisture has been is tapped, and to be able to get some water coming back in there to saturate it, that would mean more water will flow into Gatun Lake, which is very important for the water levels. And Panama Canal is very important because of the amount of grain and other resources that move down the Mississippi River system that are loaded onto vessels in the U.S. Center Gulf and go over to Asia would use the Panama Canal. Also, the Red Sea attacks that have really had escalated for a while, kind of backed off during Ramadan, now have come back. But we're also seeing it expanding over to the Straits of Hormuz, as well as the Somalia pirates are getting into the action as well. And so you're seeing that whole peninsula in the Middle East that's creating a lot of concern. And as it is, many vessel operators have bypassed around the Suez Canal, the Red Sea, and they're taking a much longer route, upwards of 2 to 3 weeks longer, going around the Cape of Good Hope just around South Africa to make their routes, and really impacting more or less what you see from Asia and into Europe. But there's a certain number of cargoes that would leave the United States, go through the Suez Canal, and then move into Asia on that kind of route. And there's a certain number of cargoes that would leave the United States, whether it's on bulk cargo, liquid bulk cargoes, or dry cargo. So they're having to take a little bit longer route around the Cape of Good Hope. And that's something that we're going to be watching, because that means you have to just get more vessels available to move the same cargo. And then meanwhile, we're seeing some other concerns in other areas of low water that we did see in South America, and those seem to have improved here recently. And so that does give some benefits there, but there continues to be some challenge here. Meanwhile, as we know, what takes place here with the United States on the agricultural side is very critical, because the U.S. does compete in the global world. Competition with Brazil has increased significantly, where Brazil has not only expanded its area to produce, it's still got a lot more area to expand into. And their harvest for soybeans is all done. Now they've been have their winter corn crop plantings have been almost wrapped up by this time. And what we're seeing is that while they had smaller soybean harvest because they had an impact of El Nino, and maybe going to have a smaller corn crop, the world's going to have a lot of grain supplies in the world. As we see from Russia, they continue to send a lot of wheat into the world. Ukraine is having challenges, still trying to get into a export program. There was movement towards, as one of those problems of some challenges on some different seaways in the Black Sea, where it looked like the end of March that Ukraine and Russia, together with Turkey, were going to reinvigorate an export corridor. There would be safe passages for vessels. It was reported in late April that that's actually broke apart, and that created some challenges here. So maybe they could still try to bring that together, and most recently see some of those cargoes move. Nonetheless, Ukraine is still trying to send some of their grain to the market because they need that cash. But that Black Sea is going to be a challenge as we go forward here. But Russia has a lot of supplies. Australia had 3 years of consecutive crop records. And then El Nino came, kind of hit their crop, but not as bad as anticipated. So you're going to have a lot of feed grain supplies in the world. And in the meanwhile, the United States has coming into planting season, and we'll be looking at that and understanding what is taking place here. The planting intentions for the United States, the first measure that USDA put out in March, did look at asking farmers, what do you intend to plant? And at the end of March, they said, we're going to plant more soybeans and less corn. Now, part of that big push is because of what's going on with soybeans and the expansion of the soybean crush sector. But nonetheless, as we go in here, we got a long ways to go into the planting season. It started off really fast right now with plantings, and we've had some open weather for that to happen. Now, Iowa is very short water right now, and a little bit of Missouri, and we got to see if they could get some weather, some rain events to come, but not before they get the crops planted. So on one hand, you got to get the crop in, and so having some dryness is helpful, but they've got some pretty dry conditions at the moment as we go forward. And meanwhile, fertilizer, ethanol, and biodiesel are certainly strong in demand and for the spring crops. Biodiesel, as we're seeing a transition away from 100% diesel into more renewable diesel, that's creating some different challenges here. But those could be some different shifts that we're going to be seeing take place for St. Louis. And as we've looked at what's gone on for the last several years on barge movements, we're seeing with coal volumes dropping rapidly just because of policies related to domestic energy, not to be burning as much coal for energy generation, and a substitute fuel supplies such as natural gas and other alternative power sources. That has certainly had an impact, and we've seen the coal volumes on the river system drop by almost half just over the last decade here. One bright spot has been some export volumes that have really sort of ramped up and stayed fairly strong here most recently in the last 3 years, really to supply energy needs in Europe, especially as they came out of losing some natural gas from Russia. And then what we're seeing in North Africa, needing coal for energy, as well as India, where their energy requirements continue to grow substantially. In the US, at least, is a safe place to come. So we could see St. Louis benefiting from some cargoes that could go through there, but certainly with the center of the country right there at St. Louis, you do have the deep draft. Once you get below Lock 27, you're able to load pretty heavy. And when you got a small barge fleet, you want to take advantage of the draft that's available as much as you can. So the St. Louis market does have a lot of advantages in that regard.
So billions of dollars have been committed for infrastructure improvements to the St. Louis region's freight network in the near term, enhancing all modes of transportation, including our ports. How important is this type of investment to advancing the region as a global freight hub?
Infrastructure investment is important, and it's everything, because you can have all the rolling and floating assets you want, rolling meaning truck or rail cars, and by floating, barges in particular, and towboats and such. And if you're not investing in the infrastructure by which they roll over or float on and through, you're not going to be able to really satisfy the investment that people have made in those assets. So infrastructure is everything. It's the means to be able to access the domestic markets and the global marketplace here. With improved infrastructure, what that means is you have better competitive positioning. One, you have assurances of movements and better flows resulting from reliable infrastructure, and that just translates into more stable pricing on freight rates. And investment in bridges, roads, and rail, and improvements being made to ports and locks and dams, that just gives greater assurance, greater reliability, and gives confidence not only to the local markets here in the United States and those in St. Louis area, but it gives confidence to the global buyer who says, look, there's investment being done. We're not hearing of some concerns or challenges or infrastructure that's failing. I kind of look at the 4 R's of the supply chain, whether it's reliable, resilient, resourceful, and redundant. There's a number of ways that we have reliability, and that just means we're investing into the infrastructure to assure that it's going to be there when we need it. It's resilient, that the U.S. system, we've got multiple outlets. In the event of something that does take place, we can be sure to serve the world market. We have the resources available, whether it's the resources from natural resources that need to be moved, but it's resourceful that we have multiple investment, whether it's not just the locks and dams and rails and roads and bridges, but it's also the grain storage that has been taking place, or the terminals that have been invested into, that you've got other types of infrastructure as you go upstream closer to the source of production and manufacturing. And then there's this redundant part where you've got to plug and participate, where now you can also come in and people can invest very quickly because you've got the ability to move with an infrastructure that's being taken care of. But then secondly, you can, at least on an agricultural side, you've got enough corn and soybeans now with much better yields and potential that you can both feed and fuel the world and the local markets here as we go forward. And that just assures that the supply chain keeps moving. But if when you do have broken things in the supply chain or in the infrastructure, and you get some sort of that's an impediment, those costs go up all around. And when you have a broken system, you just need more capacity to move the same volume. Low water, for example, you can't load as much on a barge, or you don't have as big of a barge tow, or you have a lock failure, or you have to slow down how fast you can move through lock areas, or the worst case scenario, there is a lock failure and now things back up, or whatever's above that lock upriver can't move down. And that's a pretty obvious statement. But at the same time, you can't move things up. Now you've got equipment that's out of position and you can't just quickly levitate it to another location. So the cost of transportation just gets more expensive. For agricultural purposes and markets, what you see is, on one hand, end users could bear the brunt of those costs, but at the same time, for farmers, they end up paying the higher freight costs through weakened basis. And the signal is this: when the basis collapses, the market's telling the farmer, don't move your grain off the farm. And so at the farm gate, they kind of get a backup there. And that gets to be very problematic, because if that's going to be a long-term situation that doesn't get resolved quickly, that supply doesn't move. And instead, other competitors around the world will fill the gaps and try to fulfill those requirements. And if it extends for too long, you start to move that capability elsewhere, and they make those investments in infrastructure, and now they become very competitive and help their local economies as they go forward here. And at the end of the day, a viable and efficient infrastructure allows for greater investment, to bring commodities in or products to be manufactured and to use. And that just means there's more jobs, more tax revenue. And we see that infrastructure is everything. It gives the foundation for the economy to function and to work. And the Mississippi River system is the backbone of the U.S. economy, serving well over 100 million people. Now, that's 3 out of 10 people in the U.S. population live within the tributaries of the Mississippi River system. So that infrastructure is important in what it does to serve the domestic and global markets.
The Port of New Orleans also has significant funding for the new Louisiana International Terminal. What impact do you think that project will have on the movement of ag products through the St. Louis region?
Well, Mary, last month, the Mississippi River Commission held their high water inspection trip. And I attended the meeting in Memphis, and it was interesting. There were many discussions about that particular project, and from 2 different directions. One, it was in Memphis, so there's the thought about what could this mean for Memphis? But secondly, what it would also mean for St. Louis, because that particular project will allow for, and especially as a greenfield project, meaning that they're going to start from a fresh field, if you will, and be able to come alongside the river and build a brand new facility that is going to be very clean and very efficient in the way they're going to design it. But it's going to have multimodal options available to that. Rail, truck, but also river. And not only can you get some of the world's largest container vessels that will be able to access that facility that will not be impeded by a bridge they would have to go under or have to slide by or sail by. But now you've got a situation where they can come in and quickly unload that vessel where it's got adequate water, because you've got more than 50 feet of water available for where that's going to be. But then you've got the river component where there's a couple of exciting projects. And this was brought up and really discussed for quite a while among the commissioners and among the industry, that there is great opportunities with a service such as a container on vessel that American Patriot Holdings has been designing and trying to implement for several years now. And with their focus to be with beachheads, not only taking containers away from and to that new facility in New Orleans, but also to bring it upriver to St. Louis and Memphis, but also container on barge, as we have seen with other carriers such as SCF Marine and what they've done, and to be able to serve from Memphis and Baton Rouge and going down to New Orleans. So there's that great opportunity that's going to take several years. But what this will be is maybe to get closer to the world. And that now, as you get more reliable infrastructure, that's what this offers. And that with St. Louis having a very ready-made multimodal function that it serves, and the different warehousing and different railroads that are being able to be served there, it gives great opportunities to the world that shrinks it much faster and gives reliability. You know, some people argue that, well, it's going to take longer. Well, the fact of the matter is, we can calculate and look at the number of days it takes to go through the system, whether you go to U.S. West Coast, U.S. East Coast. You can see that going through the Center Gulf and from St. Louis by water and Memphis, you can actually see that you're going to get very efficient number of days that are comparable elsewhere. While at the same time, as people find a more reliable supply chain, they will adjust to that supply chain and make that work for these different areas. And as we see different needs for investment within the hinterlands of the United States, St. Louis is right in the middle of where things can connect and come together. So it just opens for a number of chain of investments along the river and into St. Louis. And this is going to be something that will be needs to be looked at very heavily here in the short term to prepare for what's coming over the long term. Now, meanwhile, as I mentioned, with SCF Marine, they recently were acquired by Ingram Barge Lines. And that's going to be very intriguing to watch, because Ingram has also looked at the intermodal markets, and they really designed their system along with SCF Marine separately, but as they've come together, they've got a lot of experience and have done a lot of study looking at the intermodal option for containers on the river system. And it'll be very exciting to see what will come out of that and the type of investment they'll make and commitment they'll give to that. At the same time that you would see American Patriot Holdings making their investments for the river system.
How is AI impacting the ag and barge industry?
AI, artificial intelligence, this is all the talk that you see on any talking head news network, and it's really driving a lot of the futures Dow markets, for example, or the NASDAQ. And a couple of things here. I've been working with Susan Olson at Action Intel, and she's got a neat product called Barge AI. And she's been looking at some areas of understanding how can you deploy artificial intelligence by using a number of different data sets that are available in the industry. So her and I have been discussing a number of products that she already has, but also other new ones that come to the market. And what's intriguing about it is that it's not necessarily going to minimize the labor force as much as enhance the labor force and maximize what's there. It can't replace towboat captains or deckhands, but what it can do is assess what are some of the patterns or ability to think as things go through or to be able to react. And on one hand, AI, what I should say is it doesn't think, it creates. And what it does is looking across a whole number of systems, how do you look at where there are opportunities or what are key drivers that are impacting, say, towboat designs or tow configurations, commodity flows that could emerge, what's the impact of different weather events on low water, and start to awaken things more ahead of time? And is there ways to be able to take advantage of disparate data that's at the other ends of the system that could have impact right there, say in St. Louis or elsewhere in the lower Mississippi, that could really bring in some better planning capabilities that were very difficult and challenging to do in the past. And now this is just new power and technology that's coming to the market here. So see what for operators, it could certainly be very important from a cost perspective. Maybe it's more on managing their equipment, managing some of their other back of office functions. But at the same time, we've got challenges in this labor market, and this could be some ways to help with that. And there's a number of tools that are available, and I use it every day with whether it's Microsoft's Copilot or the Chat GPT, and Google and many others have their own tools that they use. And those are great resources. End of the day, you still need someone who can think and put the question out there and understand what needs to be done. But these are going to be some challenges. And so it's understanding how to put those together. And these tools of AI, they're not always right. And they don't always get a good understanding. But each successive generation or each successive week, each successive day that AI is being deployed and people are putting information in, it really enhances its ability. But one's got to watch it and to make sure what it's doing and understand how it's putting things together. It could be as simple as doing things around marketing campaigns, emails, letters, enhancing the ability to put together better services and better products as we go forward here.
So what is your current outlook for the U.S. agriculture and barge industry, and more specifically, your outlook for those industries in the St. Louis region?
Well, U.S. agriculture is facing a very competitive environment for corn, soybeans, and wheat. U.S. wheat exports, for example, are close to 700 million bushels, and that's incredibly low from where it used to be, well over 1 billion bushels. And again, it mentioned how Australia's had very big crops. Russia is still sending very large volumes to the world market. Meanwhile, Brazil has been very competitive in their expansion. But for the United States, there's going to be still plentiful supplies that we're seeing available to the world market and be ready to send to the market here. The good thing for St. Louis is that you are right there at the crossroads of where a lot of commodities and products could enter the market and do enter the market. And that gets to be important. Not only that, servicing the equipment that is coming downriver or moving upriver is just as important. And again, with a number of fleets and operators having some basis there in the St. Louis region, that gets to be very important. Meanwhile, you still need fertilizer that comes up the river, and that's going to be serving for the spring crops here, and then we'll transition over to some of the salt that comes up for the winter months, although winter wasn't as great, so there may not be as much demand for salt as we go forward here. But with the U.S. soybean crop is going to be more dedicated to soybean crush for renewable purposes. You may not have as much soybeans available to the market out of the St. Louis area, but you can certainly see corn have some opportunities. If you think about what takes place for exports to the U.S. Center Gulf, the U.S. Center Gulf serves 2 to 3 dozen markets for corn and soybeans and wheat and ag products. Where if you go to the Pacific Northwest or the US East Coast, they're only serving a handful of markets as we go forward here. But the one thing they're going to have to watch is what would take place with water levels. And the Missouri River Basin snowpack, as I mentioned previously, is going to be important to watch for this fall and early winter as we go forward here. And fully would anticipate Panama Canal should be coming back here, and that should be very helpful. Meanwhile, with challenges on the Red Sea, Black Sea, could there be still some cargo back to the United States to feed the world and serve the world and to fuel it? And that's something to keep in the back of our minds as we go forward, because today things move quickly and the world's got to be prepared to respond in kind. Watching the rail markets are very important. And with St. Louis, that has great access to railroads on both sides of the United States, with the East Coast railroads and West Coast oriented railroads, you've got a lot of ability to bring rail to the river, load barges from rail, and vice versa, load from barge to rail. And that's very exciting in that regard as we go forward here. So the other side of this is just on the barge equipment. It's very expensive. We do only have really one major builder and then another one. They are based out of the St. Louis area, but their production plant is over in Pennsylvania, and they build a few, just one or two a week, where the other one could build several a week, but they're just not building a lot. Steel prices are still expensive. Hiring people is very difficult, so it's very expensive. And the industry is really looking at how many more barges they need to have, that we see all this competition for other commodities around the world. So those are some challenges that we see here. But on the flip side of that, on the labor and the cost of goods to make this equipment is very expensive on that side of things. And so that's a continual challenge that we have here. But I would say for St. Louis, that you've got multimodal opportunities and you've got some good abilities to move set downbound from Lock 27. That gives you the full opportunity to take advantage of the draft of the river system and of that barge to be able to be as efficient as possible to get down to the center Gulf and to be able to position commodities and products for export. But with the export program for U.S. grains, it's going to be another challenging year. Already we're seeing for U.S. corn exports, it's just a little bit too big what the USDA is forecasting. I think it's going to be smaller just because it's going to be tough to compete against Brazil. Argentina came back with a big corn crop after they had a difficult year with El Nino. And so you're seeing some rebalancing in that regard as we go forward here.
Okay, thank you, Ken. What a great discussion. We now have a clearer picture on how factors ranging from water levels and global disruptions to crop production in other countries and infrastructure investment here and abroad can impact the U.S. agriculture and barge industry. We appreciate your insight on how these factors might affect the movement of ag cargo flowing through the St. Louis region in the coming months, and how continued investment in infrastructure is strengthening the St. Louis region's position as a global freight hub. I'd also like to thank our sponsors. Their support makes it possible for us to continue to deliver the great content that is a hallmark of this annual conference. Our presenting sponsors are Ameren, Illinois Railroad Association, and Steadfast City. Our supporting sponsors are the Boeing Center, Contegra, Design 9, HNTB, the Hauser Group, and the Jerry Costello Group. Freight Week will continue tomorrow with the 2024 Freight Summit Luncheon, where we will release the 2025 priority projects list with remarks by representatives of both the Illinois and Missouri Departments of Transportation. The highlight of the event will be a keynote conversation on infrastructure investment as an economic driver. Shane Gill of the American Association of State Highway and Transportation Officials is our guest speaker. We invite you to share links to any of our Freight Week content with others who may be interested.